Welcome to S&P's European loan market video overview, detailing leveraged finance trends and activity during May 2012. I'm Suchit Gupta, a member of S&P Capital IQ's Leveraged Commentary and Data Team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe before winding up with themes to watch for in June and early July 2012. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the more than 7,000 contacts in LCD's Leveraged Loan Group on LinkedIn. We're pleased to announce the launch of LeveragedLoan.com, a free website promoting the asset class. On it, you'll find recent market stats, news and analysis, leveraged finance job postings, and an online primer detailing the key terms of the leveraged finance process. The links to our new website and to follow LCD's social channels are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. The European leveraged finance market had a mixed month in May, as a Greek exit from the Eurozone, aka Grexit, didn't look implausible, and there was increased pressure on Spanish and Italian sovereign debt. May's leveraged loan issuance was 5.3 billion euros, the highest in 10 months, which is in stark contrast with high-yield issuance, which stood at 1.5 billion euros in May. The secondary loan market finished the month down 81 bips to 94.48. High-yield bonds finished the month in the secondary down 431 bips to 92.26. Even with a declining secondary market, the S&P European Leveraged Loan Index, the ELLI, finished the month up 0.1% for the month of May. The primary market for bonds was muted. Default rates rose again during the month. Focusing on the secondary loan market, this chart details the average price of LCD's European Loan Flow Name Composite, a measure of the 12 largest, most liquid loans consisting of 10 issuers since 2002. Secondary loan prices fell 81 bips to finish the month at 94.48 as the Eurozone sovereign crisis entered another chapter. This next chart details the average price of LCD's European high-yield flow name composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. Given the overall volatility in the markets, high-yield bond prices fell 431 bips to 92.3. This chart details the monthly return of the ELLI, a broad measure of European loan market returns that LCD calculates. All returns are ex-currency unless otherwise stated. The European loan market returned a positive return of 0.1% for the month of May, down from 0.26% in April 2012. The total ELLI return for the first 5 months 2012 is a positive 4.63% versus 5.56% for the same period last year. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. April's European primary leveraged finance activity was mixed, with the leveraged loan market unfazed by the stress being felt elsewhere across the financial markets from the latest sovereign upheaval. Total primary volume hit a 10-month high of 5.3 billion euros. 2 jumbo transactions launched into syndication during the month, making up roughly half of May's volume. The 1.6 billion euro long-term financing to fund the acquisition of Rowan Killicum by Fresenius, and the 1.2 billion euro refinancing for Ono. An additional 13 smaller transactions also got off the launchpad in May, including 4 cross-border deals. Meanwhile, the high-yield market was definitely feeling the stress being felt elsewhere across the financial markets. The high-yield volume was 1.5 billion euros, which is close to the unremarkable levels seen in April 2012. As a result, the year-to-date total stands at just 15 billion euros, 46% below the 27.8 billion euros recorded during the same period last year. The default rate by principal amount moved up to 4.8% at the end of May 2012, up from the 4.7% at the end of April 2012. Meanwhile, the default rate by issuer count is now up to 4.9% at the end of May 2012, up from the 4.7% at the end of April 2012. Themes to watch for going forward. As a Grexit doesn't seem implausible and there is sustained and increased pressure on Spanish and Italian sovereign debt, there is increased volatility with most high-yield market players sitting on the sidelines. Outflows continue from high-yield bond funds, according to JP Morgan High Yield Research. Outflows totaled 279 million euros for the month of May, which keeps in line with the 4 straight weeks of outflows from the US high-yield market, according to EPFR. Issuers will continue to seek the US market for both loans and high-yield bonds, markets permitting. European loan issuance so far seems to be unaffected by the overall market stress. The forward calendar for June 2012 is 1.52 billion euros from 5 transactions. The flow of amendment requests from issuers will continue so that they can extend their maturities, covenant relief, or a combination of both, as long as markets permit or as long as CLOs have to reinvest their proceeds. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including US loan market wrap-ups. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.